Tax Relief for American Families and Workers Act of 2024 was passed by the House on January 31st, 2024 with the vote 357 to 70. As of recording this video on February 4th, 2024, this bill has not become law yet, but I still want to talk about some of the provisions. As the name suggests, it provides for different tax reliefs for individuals and businesses. And so for the purposes of this video, I specifically want to talk about the business-friendly provisions, and not all of them, just the ones that will apply to the great majority of business owners and business taxpayers. So as of right now, this bill is with the Senate, and a lot of those provisions that I will be talking about will retroactively apply, if it becomes law, will retroactively apply to tax year 2023 and even earlier. So the original plan was to have this bill passed before the start of the filing season. I guess the goal right now is to have it passed as soon as possible, but who knows, it may not pass, or there may be other changes coming. So whatever I'll be talking about in this video is not set in stone, and but it's something for you to keep a lookout for and pay attention to, and maybe even get excited about taxes for once, right? So most of the things that I will be talking about in this video, you can find a more detailed analysis on these expenses in the video that I will put in the card somewhere in this video, or also in the description. But don't worry, I will talk about the current law so that you can see the differences between current and the proposed law changes. So the first one is R&D expenses, or research and development expenses. So the thing with R&D is that before 2021, all taxpayers having R&D expenses were able to expense them immediately in the year that the expenses were incurred. However, starting in 2021, these expenses can no longer be deducted on the tax returns immediately. On the contrary, you have to capitalize them and amortize over the period of 5 years. And I'm talking specifically about R&D expenses made in the US. And so the proposed law provides for a delay of this amortization of those R&D expenses till after December 31st, 2025. So starting in 2026, you would have to amortize those expenses, which is great. It's much better to expense all of your R&D expenditures in the same year that you paid them, correct? Instead of ratably expensing them over a 5-year period. So if this proposed change comes into effect, it will greatly benefit all US taxpayers who are involved in R&D research. So the next big thing that will affect pretty much everyone is bonus depreciation. So in case you don't know what depreciation is, if you purchase equipment or machinery or some property that produces income for your business, in most cases you cannot deduct the entire purchase price of that equipment. Instead, you have to capitalize it and amortize or depreciate it over a particular amount of years. It's based on various rules and tables depending on the type of the property, when it was placed in service, the cost, and a whole bunch of different methods. I'm not going to get into details, but bonus depreciation is a very nice concept that allows taxpayers to subtract pretty much the entire amount of the purchase of the cost of the equipment, let's say. So in our case, with the passage of the TCJA of 2017, bonus depreciation was actually changed a lot, and it allowed for 100% depreciation deduction in the year that you placed your property in service, which was great. It effectively allowed you to expense the entire cost of the equipment that you place in service for your business. However, the TCJA Act provided for a slow decrease of this bonus depreciation percentage. So starting in 2023, bonus depreciation would go down to 80%, and then 60%, 40%, and 20% every single year down until in 2027 bonus depreciation would be completely eliminated. That's, based on what the current law is. The proposed law wants to extend the 100% bonus depreciation through 2026, and specifically for 2027 it would extend bonus depreciation for longer production property and certain aircraft property. So that's obviously also a very business-friendly provision that, if it passes, will greatly benefit business taxpayers. So the next item is Section 179 deduction. It's related to depreciation as well. It's similar to bonus depreciation, but also very different. Section 179 deduction deals with different types of property that is eligible. It needs to be specifically qualified new property that you place in business, and also Section 179 deduction is a dollar limitation as opposed to a percentage limitation. So Section 179 currently for 2023 allows for deducting immediately the cost of your specific property up to $1.16 million in 2023. However, if you place in service property worth more than $2.89 million, then this reduction is limited and eventually phased out and disappears. For 2024, the thresholds are different, so you can subtract up to $1.22 million worth of equipment that you place in service, and the limit is reduced dollar for dollar by the amount of expense in excess of $3.05 million. So the proposed law changes these thresholds limitations for the year 2024, and specifically for property placed in service in 2024, the deduction limitation is increased to $1.29 million, and the expense limitation is increased to $3.22 million, and then after 2024, these amounts would be adjusted for inflation. Obviously, we all like when the thresholds for limitations are increased. They increase the amount of the deduction that is allowed, the maximum amount, but they also increase the maximum amount of property that you can place in service before this limitation is reduced. If you're a business who had to pay independent contractors and had to issue forms 1099, specifically 1099 non-employee compensation or 1099 miscellaneous forms, you probably know that as of right now, you have to issue those forms if you make a payment of at least $600. And the proposed law increases this amount to $1,000. But this will only come into effect for the year 2024. So this proposed bill will not change your filing requirement of these forms for the year 2023. But still, it's nice to have fewer papers to file as a business owner, right? And this $1,000 new threshold for 2024 will be adjusted for inflation going forward under the proposed bill. So the last item that I want to touch briefly upon is the Employee Retention Tax Credit, or ERTC or ERC, depending on how you want to abbreviate it. It was first established during the COVID-19 pandemic, specifically in March 2020, and it was a credit specifically designed for businesses whose income was affected due to the lockdowns but who retained employees. And that credit was claimed against some of the payroll taxes. And then this credit was extended by the American Rescue Plan Act of 2021 and even expanded a little bit so that the credit could be claimed against the Medicare taxes as well. Under the current law, taxpayers can still claim the ERC credit up to April 15th, 2025, even though the period of retention employment has been passed a long time ago. So I can bet that pretty much everyone at this point has probably seen at least one ad on YouTube, online, or even mail advertising where third-party processors offered services on processing ERC credit for taxpayers, and those are called COVID ERTC promoters. And so recently the IRS has become aware of numerous fraudulent claims of the ERTC by various taxpayers, and a lot of times taxpayers don't even know that they are claiming this credit under fraudulent circumstances, mostly because of these third-party processors. So in late 2023, the IRS announced that they are putting a freeze on accepting any additional ERTC claims while investigating the backlog of unprocessed claims for potential fraud. In the meantime, the IRS has established an amnesty program for taxpayers who found out that they claimed for the employee retention credit but were not entitled to it. These taxpayers can withdraw their claim, or if they already received the credit to which they're not entitled because they're not eligible, they can pay it back to the IRS without incurring any penalties. So the most significant change of the proposed bill is that it would terminate the claim of the ERC credit on January 31st, 2024. So basically it would be a retroactive aspect of the bill as well. But also the bill increases the penalties for fraudulent claims and requires these third-party ERC promoters to report themselves to the IRS, and also it increases the period of limitations for assessments of these ERTC claims to 6 years. This bill provides for many other tax reliefs for businesses. One of the bigger ones is Section 163J limitation changes or business interest expense calculation changes, but it only applies to very large taxpayers. The individual level, one of the biggest things is obviously child tax credit. I hope this information was useful to you, and I hope you are excited about the potential changes, and hopefully they come into fruition eventually. If you have any special circumstances, feel free to contact me at lydiacpa.com or click the links in the description of the video. My first consultation is free, so you have nothing to lose, and we can talk about your tax-related matters. And have a great day in the meantime, and I hope to see you in the next video.